Hello and welcome back everyone to this weekly update on the financial markets. My name is still Jens, and like every weekly update I want to cover with you my four main assets: S&P 500 index for the broad market view, US oil for the price of energy, gold as the one main precious metal, and the king of crypto, Bitcoin against US dollar. On the weekly, daily and 4-hour time frame, I will give you my view on these markets. What will follow afterwards are my single assets, mainly single stocks, but also some crypto and indices. The red flagged ones are the ones I'm currently having a position open at my interactive progress account. I have at the moment 10 trades open. I will show you how I manage these ones. And yeah, let's start directly in with S&P 500 index on the weekly time frame. If you want to skip any part, you can see the timestamps down here in the video and jump directly to the asset you are interested in. The S&P 500 index on the weekly time frame, you can see that we're printing higher highs followed by higher lows. So an intact uptrend. You can see slightly MACD divergence here on the weekly time frame, but we had that scenario also in 2024, and you can see we have seen this divergence, but price kept climbing. So don't be too afraid of that one here. If we zoom a little bit in, you can see the second half of 2025 was pretty bullish. We've seen only a 4-week corrective move, and then it got directly bought again. And now we are rising above the prior all-time highs on the weekly and have closed also higher on the weekly time frame. In my view, that's bullish. If we drop one time frame lower to the daily time frame, you can see that we have here an intact daily white solid uptrend line, some sideways consolidation. This was the corrective move you have seen on the weekly time frame. We struggled to break higher. Because of that, I was able to draw in this daily resistance zone, but once price was able to break higher, that was the first opportunity to go long in this index. We've seen a pullback and then a push higher, taking out the pullback to the upper side last Friday. So that's another confirmation for going long in this index. If you want to make research and decisions always by yourself, I would place personally my stop loss below this swing low here, or if you wanted more risky, this low, and I would aim for 1-to-1 risk-reward ratio for taking partial wins, selling 50% of the position, taking with that the trade risk-free. So if we reach the first profit target, reverse, take out the stop loss, the trade would have been net zero, not a loss, but also not a profit. And yeah, if the trade afterwards decides to continue higher, you can ride this 50% higher and manage accordingly from day to week. If we drop one time frame lower to the weekly time frame, you can see it only in a bit more detail. We had here a nice support zone lining up with the 200 moving average on the 4-hour time frame, an ABC correction to the downside, and downtrend got broken to the upside, not able to make a higher high, correcting down to retest this downtrend line and break higher with an new all-time high. Picture perfect. Higher low, again and higher high on the weekly time frame. Nice all-time high level. I'm bullish. I think the likelihood of rising prices is higher than the likelihood of declining prices. So that's making me also pretty bullish for the broad market and my single stock positions. Next on the list, US oil. US oil or crude oil on the weekly time frame. The red monthly downward line got broken to the upper side. Since then we are in this weekly correction. You could argue this is an A, B, C pattern. Point C, the lowest point of the movement recently created. We are below this weekly orange downtrend line, so the downtrend is intact on the higher time frame here. If you drop down to the daily time frame, it looks a little bit better. We tested the last low, slightly lower low, but really only slightly. We have a daily downtrend. That one got recently broken. MACD divergence, price is making lower lows while MACD indicator is making higher lows. That's a bullish divergence. So a lot of speaks for short-term bullish price action. I showed you this setup already last week in the last video. You can rewatch if you like to. There I said I would like to see a higher low. We have seen that, and then a break above the recent high would be a confirmation that we change from a downtrend to an uptrend. I would have gone long here, aiming for 1-to-1 risk-reward ratio similar to the S&P 500 trade. And once we reach that, take 50% from the table of the position to take the trade risk-free. Because yes, we can see short-term bullish price action, but the question is how long this will go to the upside or how far. And I think as long as we are below this major weekly downtrend, the likelihood of continuation of this downtrend is higher than breaking it to the upper side. So take your profits fast and don't risk too much on a trade. But with this short-term setup, I would more likely bet on short-term rising prices than on falling prices. Long-term, I'm more bearish than bullish. I think that's everything you have to know about the current US oil situation. Next on the list is gold. Gold against US dollar on the weekly time frame. We had a major resistance zone that price wasn't able to break to the upside, but once it did, we went into this bullish rage mode. MACD is confirming the move, no divergence all the way up here, and still right now also no divergence on the weekly time frame. We are seeing pullbacks that are getting bought and continuing higher, bullish on the weekly. Dropping down to the daily time frame, you can see the daily white solid uptrend line is intact, but price is pretty far already away from that. So I was drawing in a secondary white dotted uptrend line here. We've seen a high, a pullback, breaking the high to the upper side, pulling back and turning again on the way to new all-time highs. So that was resistance. Here it turned support, was holding well, but the moment we see a break below this last swing low, I think you should get out of gold or at least get defensive, because I think that's a line in the sand right now. If we break that down, you will see probably a correction to this last major support zone. That could be the $3,900 level for gold, because there, this low, the daily uptrend and the 200 moving average is probably aligning. We have a MACD divergence on the daily time frame, so price is making higher highs while MACD is making lower highs. So be cautious with gold. Once you see the breakout to the upside, you can think about a long position with a stop loss below this last swing low. If we drop one time frame lower to the 4 time frame, you can see it in more detail, but nothing to add here. I will not open up a long position probably if we see new all-time highs, due to the fact that I'm already in 10 trades with no reduced risk right now. So my portfolio is full, so to say. Nothing to add anymore until I can reduce risk in some positions or reduce risk position or getting stopped out. But we will not hope that I get stopped out. Next on the list, Bitcoin. Bitcoin on a weekly time frame, since the prior all-time high from the last 4-year cycle, we declined about 70-80%. Yes. And since then we have seen higher highs followed by higher lows on the weekly time frame. Technically this is still a higher low because we're higher than the prior low, but of course it does not feel like we are in an uptrend because we lost significant since the last all-time high here, and the expectation of most of the market participants and Bitcoiners was that we will reach higher numbers for this 4-year cycle. I think the all-time high is probably in. There's an outside chance, I would say 10%, that we'll see another all-time high for this 4-year cycle, but I think that's more unlikely here. What's more likely in my view is that we maybe see a counter trend move, roll over and continue the bearish movement all the way down to this monthly uptrend line, probably in combination with the support zone of the prior all-time high from the last 4-year cycle. That would be a nice spot to look out for long opportunities again in Bitcoin and trade the next 4-year cycle, the 3 bullish years of a 4-year cycle, higher again. Yeah, this is not a pullback like in prior cycles. That would be roughly 50%, but the structure we see from prior cycles is that each cycle is making less gains to the upside, but also less drawdown to the downside. So we have seen less upside than expected, so we'll probably see also less downside than expected. That's at least my view, my opinion. Make research and decisions by yourself. That's for the weekly time frame. Let's drop down to the daily. You can see the daily downtrend is short-term broken to the upside. We are pulling back right now, testing the 50-day moving average that could act as support here. Once we break this to the upper side, a long short-term long trade is possible with a stop loss below this pullback here. I would take 50% from the table once we make our risk as profit, take the trade with that risk-free and ride the rest higher. How far Bitcoin will go, and it's if price structure evolves, we trail our stop loss higher. Like I said, I think outside chance that we will see a new all-time high, and a higher chance that we will see a counter trend move that will probably stop at the next major support zone, or in this case resistance zone, and then roll over and continue lower. Yeah, on the 4-hour time frame, there is not really much more to say except that you don't, if you get long, you will get long above this last swing high, and that would align with this 4-hour resistance zone. I will not get into this trade if it happens, as long as I have no free capacity in my account balance. At the moment I have no free capacity. I will show you that later in my program where I track my positions. But yeah, if you have capacity, that's a possibility for short-term long trade in Bitcoin. So short-term, I'm bullish, mid-term, I'm bearish, and long-term, I'm bullish. Let's continue with my single assets list, and especially the red flag ones where I'm currently invested in. Reddit Inc. on the daily time frame. You can see the stock ain't that old. March 2024 was the IPO of this stock, and since then we are pretty volatile, trading to the upside. Higher high, higher low, higher high, higher low. Worked so far perfectly well. I was able already to draw in a weekly uptrend line here. We have seen a pullback to this in an ABC correction marked by this daily white solid downward line. That one got broken to the upside. Then we had seen some sideways consolidation, printing higher lows. Once we have seen a break above the last swing high, I entered a long position with a stop loss below the last swing low here, risking 1% of my account balance here. I would aim for 1-to-1 risk-reward ratio, slightly below the last all-time high. There I would take 50% from the table. Like you can see, the sell limit order is already active. At the moment we collapsed slightly to the downside, at the moment in a paper loss here, but the daily support zone at the moment seems to hold. We will see how that evolves the upcoming week. I hope we will turn, continue higher, take out my partial win here, take with that the trade risk free, and then ride the rest of the position higher, probably to new all-time highs. At least that's the idea of the trade. Next on the list, JP Morgan Chase. JP Morgan Chase daily time frame. You can see it's a nice uptrending stock. We have an intact daily uptrend. The all-time high level, we had some sideways consolidation with slightly higher highs, and once we have seen a break above this daily resistance zone, I was waiting for a pullback like this. The pullback then got taken out with a nice green engulfing daily green candle. I went long in the stock, stop loss below the last swing low, below this daily resistance zone, now turning support for price, and the wood is also aligning at the moment with this daily weight solid uptrend line. Aiming also here for 1-to-1 risk reward ratio. Once I made my risk as profit, I take 50% from the table. Sell limit order already active. With that, the trade would be risk free, even if my stop loss get hit afterwards, and the rest of 50% of the position I would like to ride higher and trade my stop loss accordingly. That's all I have to say for JP Morgan. Let's follow with a similar ticker name, JBL. JBL, like you can see on the long-term daily chart here, rising beautifully, printing higher highs followed by higher lows. Lately we have seen a daily intact uptrend line, long sideways consolidation with a downtrend. Then we have seen the first higher high, then a higher low, and another higher high, and I went long in this stock. We collapsed afterwards a bit back into the sideways consolidation. At the moment, the 50-day moving average is holding price. As long as we don't see a lower low, I'm in the trade. There's my stop loss placed, risking also here 1% of my comp balance or 100 USD, aiming for 1-to-1 risk reward ratio for my first partial profit taking. Sell limit order already active at the moment in nearly 50% drawdown in this single trade, but I have the hope that we will continue with an overall rising stock market like we have seen at the S&P 500 index, that we will continue also here. The numbers are good and fundamentals are aligning with the uptrending chart, so good setup no matter which direction the trade will go. Let's continue with a uranium ETF. Global X Uranium ETF. That's an ETF that's covering a couple of stocks that are involved in uranium production and use. And we have seen longer sideways consolidation marked with this weekly resistance zone. That one got broken to the upside. Since then we are in an uptrend. Daily uptrend was broken, but we have seen here an ABC correction, then an high that is exceeding this daily secondary downtrend line, a higher low, and then exceeding the swing high also to the upside. That was the moment for me that I thought, okay, probably this short-term downtrend is over and the overall uptrend will continue. So we went long in the stock. Stop loss is placed below the last swing low. And so far that went well. I'm aiming also here for a 1-to-1 risk reward ratio, placed slightly below the prior all-time high of this ETF. And there I plan to sell 50% of my account balance. Sell limit order so far not placed already, because you can't borrow at Interactive Brokers this stock twice. So here my 19 stocks or shares are also already as a sell stop for my stop loss. Once we reach or near the take profit significant, I will move my stop loss shares to my take profit order, and then I can execute with half of the current position my take profit and take 50% from the table and ride the rest higher. Next, Novo Nordisk. Novo Nordisk on the daily time frame, you can see an uptrending chart and then the massive collapse. We've seen an 80% collapse in this stock with a weekly downtrend line that's first time broken since a long time, since the high of June 2024. And we have seen a MACD divergence where price was making lower lows and the MACD indicator was making higher lows. So bullish divergence, I use that for getting long in this stock. We have seen on the 4-hour time frame here some sideways consolidation, and once that one was broken to the upside, I decided to get long in the stock. Stop loss is placed below the low of the complete weekly movement, aiming also here for a 1-to-1 risk-reward ratio for taking partial wins. Sell limit order not placed here out of the same reasons like at uranium, because the broker is here the problem. Once we are nearing significant, I would reduce the sell stop order and put that half of the position here at the take profit, and the rest of the position after the partial sell, I will ride higher, hopefully a long time higher, because that's a quality stock that's, in my view, a bit mispriced, but the market has to decide that, not me. Next, Elevance Health. Elevance Health Inc. on the daily time frame, you can see long-term uptrending stock. We have here a monthly red solid uptrend line that's still intact. We had a major downtrend here. The weekly downtrend is broken to the upper side, as well as the 200 moving average here. You can see we have been printing lower lows and lower highs. Here was the first change in structure. We have seen a higher low, and with that breakout also a higher high. So a change from a downtrend to an uptrend, at least that's the hope here. I'm long in this at the stock near my entry level right now. Stop loss is placed below the last swing low, aiming for 1-to-1 risk-reward ratio placed right at a weekly resistance zone, which was once support. There would sell 50% of the positions to take my trade risk-free and ride the rest, hopefully also higher. Qualitative stock in the healthcare sector. Next in the list we have Intuitive Surgical. Intuitive Surgical Inc. on the daily time frame, you can see long-term uptrending stock. We have here a weekly uptrend perfectly matched with this ABC correction. This ABC correction, marked by this daily downtrend line, got broken with a significant price gap to the upper side. Then we paused at this daily resistance zone. Sideways consolidation got broken to the upper side with a nice green engulfing candle. Also here MACD was turning to the upper side, and I decided to get also here long in the stock. Stop loss placed below the sideways consolidation, aiming for a 1-to-1 risk-reward ratio above the all-time high, betting on a continuation of the overall uptrend. Here I would also take 50% from the table, take the trade risk free, and continue riding the half of the position longer to the upper side and trailing my stop loss accordingly to price structure. Then we have a defense stock, Rolls-Royce. Rolls-Royce Holdings on the daily time frame, nice impressive uptrend here. We have seen that the daily uptrend was broken to the downside with an ABC correction, stopping at a daily support zone. And from there on, we have seen a break of the downtrend line, a pullback, and a break of the pullback to the upside. I was conservative and waited for a break above the all-time high level, entered there long or a little bit higher, because the trade was executed with a limit order and the limit was there. The price wasn't the best I got with the automatic execution by my broker. stop loss placed below the low in this ABC correction, and aiming for 1-to-1 risk reward ratio before selling 50% of the position, and the rest I would like to trade higher. That's all for Rolls-Royce. Next, another defense stock out of America, HEICO Corporation. HEICO Corporation on the daily time frame as well. We have an intact weekly uptrend, a nice uptrending stock at the moment, supported by the 200 moving average. We have seen a sideways consolidation at the all-time high level. This sideways consolidation got broken out to the upside. That was the moment I was buying the stock. Stop loss placed below the last swing low inside this sideways consolidation, aiming for 1-to-1 risk reward ratio. Sell limit already placed, and at the moment nearly 50% in profit. I hope that this partial take profit will get hit, and with that I would sell 50%. The rest of the position I would ride higher, but my trade would be then risk free. Next, the German stock index DAX. The DAX, the German index, is nicely uptrending. We have seen a huge pullback after the tariff news from Donald Trump, but afterwards we snapped back up to new all-time highs, and from there on into a massive sideways consolidation. 200 moving average was lately supporting the price action, and now we have seen a breakout to the upside out of this range. I entered a long stop loss at the end of the range to the downside, so pretty conservative, a lot of wiggle room for price here, aiming for 1-to-1 risk reward ratio to take partial wins, taking 50% from the position from the table, and the rest I wanted to trade higher with a trailing stop loss depending on price structure. That have been all my active trades. I have a couple ones on the watch list, and I monitor them each and every week. And because once I can reduce my risk here, reduce position, and with that risk, I am willing to take another trade, so that the maximum of potential loss I can have once in a portfolio is not more than 10% of my total account balance. But I will show you that now on my trading software I programmed myself to keep check of my position size and risk I have in the portfolio. Here is my self-programmed portfolio tracker. I put in a base capital of 10,000 euros multiplied by the margin of 1.5. I could borrow more from the broker, but borrowing money from your broker costs every time interest rates, so I want to keep that small, and that equals my maximum exposure of 15,000 euros. My maximum risk in percent, so 10% of 10,000 euros is 1,000 euro, and I have that at the moment at open risk, like you can see, and I have zero risk buffer left to invest. My total equity at the moment 10,000 euros, and performance is still at zero because no trade is closed or finished right now. I would have open 5,859 euros to invest, depending on my base capital and my margin. That's the amount I have invested right now. But yeah, the risk is the limiting factor right now. I have 10 trades open with each 100 euros at risk, so 1,000 euros, 10%. So no new trades until I reduced at some trade here risk or closed it completely. If you click on the trade, you can see all the details, screenshots from the trade and the development of the trade, my analysis, why I was taking the trade like I did, the strategy I was using for trading this stock, the entry date, the exit date, and if the trade is finished, also my total profit in euros and percentage, and the fee I had to pay my broker for executing the trade. And then this will show as closed, and then all the stats will update automatically. That's how I keep track on my trades, on my risk, on my capital. I hope that was also interesting for you. If you haven't yet, subscribe to the channel and leave a nice comment. And yeah, then I hope we will see us next video next week. Till then, happy trading. Bye bye.